Today, we're diving into a hot topic that many social media influencers might not even realize is creeping up on them: taxes. SARS is paying attention to the different income streams that influencers earn, whether it is collaborations, gifted trips, or even product drops. Joining me today is Ammar, a tax consultant who's here to break it all down. Welcome, Ammar.
Thanks, Alison. Thank you for having me on. I think it's quite important that we discuss this in depth, at least to break down the important steps influencers could take to be compliant.
So let's start at the beginning. Why are social media influencers suddenly on SARS's radar?
Influencers are no longer just content creators. Now they're looked at as business owners. The industry has exploded, and with that comes money. So SARS recognized the influencers. They recognize the fact that influencers earn income just like entrepreneurs through sponsored posts, collaborations, product promotions, and even affiliate links. To make it official, SARS has actually created a separate taxpayers segment for influencers. That means influencers are now in the same league tax-wise as high net worth individuals and international businesses.
So, if influencers are treated like entrepreneurs, what exactly counts as taxable income?
So the biggest misconception here is that influencers think it's just cash payments, and it's not just cash payments. SARS looks at everything with monetary value. That could include cash for sponsored content, free products like beauty drops or clothing, services like professional photography, and even trips or experiences offered in exchange for content creation. So, for example, if a brand gives you a 20,000 rand trip, a trip worth 20,000 rand, SARS counts that 20,000 rand as income, and it would eventually include that 20,000 rand in the taxpayer's taxable income, even though the influencer would never see that as cash.
So basically, influencers have to declare all sorts of incentives received in exchange for content creation. And what you are saying is that these non-cash incentives have to be declared, from my understanding, at market value.
Yes, exactly that. These said incentives are taxable. Influencers often underestimate this, thinking a PR box or like a gift or a gifted phone or sponsored trip is just a perk. But SARS values these freebies as they value these freebies on their fair market value, and they would add the fair market value of these freebies to the taxpayer's taxable income.
But how does SARS even know what influencers are getting?
Well, by law, SARS has access to third-party platforms, and SARS can use these platforms and access information using these powerful tools. And now these powerful tools include third-party reporting, so banks, payment apps, maybe SARS would call travel agencies, and even brands are legally required to share the data if SARS requires. And they also make use of AI-driven analytics. SARS compares your lifestyle to your reported income. If through social media, SARS can use the social media to their advantage to see if, for example, an influencer is traveling in business class or staying at five-star hotels, but is only declaring 50,000 rand income. That's a big red flag for SARS.
So are you saying that flaunting the incentives that influencers receive from brands and other businesses online could actually land influencers in trouble with SARS?
Yes, absolutely. What many influencers don't realize is that their own content can become part of SARS's evidence base. Social media posts showcasing luxury trips, gifted products, or high value experiences are publicly accessible and can be cross checked against declared income. SARS has invested heavily in data analytics and AI tools that allow them to compare an influencer's visible lifestyle with what's being reported in their tax returns. If there's a clear mismatch, for example, frequent international travel and luxury brand partnerships, but minimal income declared, that's a red flag. In other words, your Instagram feed, TikTok videos, or YouTube content can effectively act as an open record that SARS uses to verify whether you are being fully compliant.
And what happens if influencers don't declare their income properly?
Well, there would be penalties, and penalties can be brutal. SARS is ramping up on audits using AI and third-party data, often without prior warning, leading to steep penalties of up to 200% for unexplained income or non-compliance. On top of that, there would be interest charged on unpaid amounts, and in extreme cases, SARS can also pursue criminal charges.
How could influencers prevent this, and what could influencers do to stay compliant?
Well, there's a few basics. The first would be to register as a provisional taxpayer, because influencers' income is business income. I think influencers would also be required to file accurate annual returns and declare both cash and non-cash income in the returns that they file. So, for example, if they receive any sort of free trips or sponsored trips, for example, for content creation, that non-cash income would need to be included in the taxable income, in their gross income. They should also keep proper accounting records, for example, invoices and receipts and contracts that would, speak to that, to the income or to the expenses that they would, that they would want to claim. They should also track the market value of every free product, service, and trip that they receive, because obviously SARS would look at the market value of these non-cash benefits. And ultimately, they should make sure everything that they claim can be backed up using these receipts and these source documents. Because when SARS selects these returns for manual verifications for orders, they always ask for supporting documents. So it's very, very, very important to keep these invoices and receipts and contracts that would speak to these amounts being claimed as deductions and income being declared in the tax returns.
Right. So you mentioned provisional taxpayers. Can you explain what that means?
Sure. So unlike salaried employees, influencers don't have employers deducting their PAYE. So SARS requires them to pay provisional taxes. Like a sole proprietor would pay the provisional tax, any business owner would pay provisional tax. Essentially, it would be prepaying their tax twice a year. So you would be filing 2 provisional tax returns a year. The system ensures that irregular income streams are still taxed properly.
And what kind of deductions can influencers claim?
Well, quite a few actually. We should think of it like influencers running. Basically, we should think that influencers are running a business, like a sole proprietor. Deductions may include home office expenses, equipment like cameras, ring lights, and laptops. They could actually deduct wear and tear on those cameras and ring lights and laptops, because that equipment is essentially being used in content creation. And any sort of other bills that would be directly related to the income, which would be like the internet bills and phone bills, maybe travel expenses linked to content creation. And I guess everything that seems legitimate and that can be supported by, receipts and invoices and any sort of supporting documents, any expense that would meet the requirements of the general deduction formula as per Section 11A of the Income Tax Act. Anything that's not of capital nature and that can be direct, and where SARS can determine that it's directly related to the income earning structure of the said influencers.
So this leads to my next question. How important is documentation in all of this?
So documentation is absolutely critical, and it's the backbone of compliance. SARS does not accept estimates, assumptions, or ballpark figures. Every item you receive, whether it's a PR package, a luxury trip, or a service provided in exchange for exposure, it needs to be recorded at its fair market value, with supporting evidence where possible. For example, if you claim a home office deduction, you must have proof of the actual expenses incurred. such as rental agreements, electricity and internet bills, and even a floor plan or pictures showing the dedicated the dedicated workspace. Similarly, if you deduct wear and tear on equipment, like cameras or laptops, you should keep invoices and receipts that disclose the cost of the assets and have, the workings or calculations used to determine the wear and tear amounts, so that SARS can see that you use the correct write-off periods, the correct SARS write-off periods. The reason this is so important is because in the event of an audit, SARS will expect you to produce documentation that justifies every amount you've declared or deducted. Without proper records, SARS is likely to disallow your claims, impose penalties, and charge interest on the understated tax. In short, good documentation isn't just about ticking boxes. It's your first and strongest line of defense if SARS ever scrutinizes your tax affairs.
So let's talk about audits. How common are they for influencers?
At the moment, from what we've been noticing, I think it's increasingly common. SARS is actively targeting influencers because they know it's an area of non-compliance. Audits can go back years, meaning if you haven't declared your income correctly since you started, SARS can catch up with you, and these penalties and interest would be piled on because they would be working retrospectively on all, on going back in the years, to determine if the correct income was declared since since these influences started. So it's very important to, at least from now, to act up, to speak to a tax professional or to get professional help to at least start filing correct and appropriate returns.
How can we as consultants assist influencers in managing these obligations?
So our role as consultants is to bring structure and clarity to what can feel often like a very chaotic environment. Influencer income is unique in that it often comes from multiple sources, both locally and internationally, and it includes not only cash but also non-cash benefits such as gift products, trips, or services. Managing this correctly requires a tailored approach. Firstly, we ensure that influencers are registered correctly with SARS, typically as provisional taxpayers, so that their income is properly accounted for from the outset. Beyond registration, we advise on the most efficient business structure, whether it makes sense to remain a sole proprietor or to establish a company or trust, depending on the influencer's income level, growth, trajectory, and risk profile. We also play a crucial role in accurately valuing non-cash benefits, and this, I think, is where influencers have the most difficulty. This is often where influencers stumble because determining the fair market value of a luxury trip or high-end PR package isn't straightforward. By ensuring these valuations are correct, we reduce the risk of SARS challenging the declarations. In addition, we assist in maintaining proper accounting records, setting up bookkeeping systems, tracking income and expenses, and ensuring that every transaction is supported by the documentation that's required. We prepare and file both provisional and annual returns on time. We minimize the risk of penalties and interest by filing those returns on time. And perhaps most importantly, we stand by our clients in the event of a SARS audit or dispute. Remember, when it comes to preparing objections, we can help the client by preparing reasonable grounds for objection, to object to certain penalties or interest. And we would represent our clients professionally and manage the process to protect their financial and reputational interests. In short, consultants act as both a safeguard and a guide, helping influencers remain fully compliant while also ensuring they take advantage of legitimate deductions and structuring opportunities to optimize their tax position.
So would you say that working with a tax professional is optional or is it essential?
I'd say it's essential. Influencer income is complex, multiple streams, irregular payments, freebies, foreign brands, you know, sponsored events, sponsored gifts, sponsored trips, all of these things that are non-cash. They would require expert guidance on how to value these non-cash benefits. And it's easy to make costly mistakes. So as a tax professional would not only keep the influencers compliant, but would also help them optimize their tax position.
What's the biggest misconception influencers have about tax?
I think the biggest myth is that if you didn't get cash, you don't need to declare it. That is simply not true. Whether it's a trip, a gadget, or professional service, SARS considers it as income. Another misconception is thinking that I'm too small to be noticed. With AI and third-party data, no one is too small. So SARS can use, social media to track these influencers to see how much they're spending, and if it doesn't correspond with the income that's declared, then penalties can be raised. These influencers could go through heavy audits, and like I mentioned before, SARS can also sue legal. There could be legal consequences also in that case. So it's very important to remain compliant, or at least to have to get some sort of professional guidance.
So to wrap up, what's your message to influencers listening right now?
Influencing is a business, and SARS treats it like one. Every cent and every incentive counts as income. If you ignore this, you risk massive penalties, audits, and even legal consequences. But if you get the right advice, register properly, and stay compliant, you not only protect yourself, but also maximize your earnings. My advice would be, don't wait for SARS to contact you. Get ahead by contacting a tax professional or consultant today to assist you with your tax affairs.
Thank you, Ammar, for breaking this down so clearly and comprehensively. I think it's absolutely vital for social media personalities and digital entrepreneurs to understand that SARS scrutiny is not something they can afford to overlook. Your online lifestyle may look picture perfect, filled with brand collaborations, luxury travel, even high-end product drops. But if your taxes aren't in order, then SARS is going to notice, and the consequences can be both financially and reputationally damaging. This conversation has highlighted just how important it is for influencers to treat what they do as a real business with the same responsibilities as any other entrepreneur. Proper registration, accurate declarations, and detailed record keeping are not optional. They are essential to protecting both income and credibility in the industry. For those listening, the key takeaway is this. The influencer economy is growing rapidly, and SARS has the tools and the determination to ensure it captures every rand of taxable income. Don't wait until you're faced with penalties, audits, or even legal action. Be proactive, seek professional advice, and make compliance part of your brand's foundation. Ammar, thank you once again for sharing your expertise today. To our audience, thank you for tuning in. We hope this episode empowers you to take the right steps to safeguard your career and your finances. Until next time, stay compliant, stay informed, and we'll see you in the next episode.